What up, people? Happy Wednesday. Welcome. Hope all the rebels are good. Hope all the rebels are well. Excuse me. But y'all know what we do. We do the same thing every Wednesday. It's Wealthy Wednesdays, where I answer all your money questions live. Personal finance, taxes, stocks, anything you want about money, we talk about. As long as it's legal money. I try not to talk about anything illegal. Why? Because I don't think I look good in an orange federally issued prison suit. The orange color may go good with my skin tone, but the whole jumpsuit thing don't work good with me. Nor do I want any federally government issued polo shirts. I'll stick with my own polo shirts, my Finance Rebel polo shirt or my Philly Tax Team polo shirt. Those are the only polo shirts I want to wear. I don't even want to wear any other brands. I'm actually tired of all these big luxury brands. I don't know about y'all, but 9 times out of 10, they're not for the community. They don't care about the community. But I could go on and on and on. However, it seems like our community just wants to keep shouting these folks out. I don't get it, especially when they don't hire people in our community. They don't hire and do work with Black businesses and Black people. But we still love to give them props, give them our money and everything else. Give them our money and free publicity, because the strongest form of marketing is word of mouth. But, it is what it is. It is what it is. I don't want to start this off on a tirade. I don't want to start this off on a rant. We're going to have a good time tonight, y'all. A lot going on. As everybody's coming in the room, I'm just going to say hello to everyone. Hey, Miss Edith, how are you? Welcome. Hey, Miss Adrian, how you doing? I'm good. No complaints. It's cold. It's the winter. It's the cold winter. And it's snowing outside. So that means I got to shovel. But thank God I got 2 teenage kids. So guess who'll be shoveling? So, I won't be doing all the shoveling. I'll get out there and do something with them. Plus, I get to hit them with a snowball a couple of times beside their head. Problem is, now they can throw them back. So hopefully, they aim ain't too on point tomorrow when we get out there and start doing our thing. What's up to everybody on Instagram? My man Jack, the first 3 is on. Jack been rocking with me for a minute. And, I appreciate you, sir. Just got a new business going, so I can't wait to check it out. So, all right, who else just joined the room? Don Johnson's here. Thank you, sir. And Don, thank you for those retweets. I appreciate you, sir. I appreciate those retweets. Thaddeus Green is here. What's up, bro? How you doing? Did you buy some more stock this week? Don, did you buy any stock this week? Mr. Ernest Owens, how are you, sir? Welcome. Ray, is that Raina C. Jones? How you doing? Welcome. Welcome to Wealthy Wednesdays. All right, y'all. Start throwing y'all questions in. We got a whole lot going on. How y'all IPOs doing? How y'all DoorDash doing? How y'all Airbnb doing? I'm looking at DoorDash and it ain't looking too sexy. I ain't looking at Airbnb yet, but it's coming. That Airbnb hit, that DoorDash hit like 195 on the open that first day. Opened at 182. I forget. Dang, I just talked about this last week. I forget what the IPO price is. Let me look it up real quick. Y'all know how I feel about IPOs, right? There's a reason why I tell y'all not to buy IPOs on the first day. What's up, Fred B? How you doing? Right, so DoorDash opened at 102, went to 195. Can anybody guess what it is right now? No cheating either. No Google, no Yahoo, no Bing. Does anybody even use Bing? Let me get my writing utensil. So DoorDash's IPO was $102. First day high, right? And I'm just talking about this until y'all start putting questions in the chat. By the way, I'm not hanging out with y'all all night either. All right, so first day, the high was 195 on DoorDash. $195, 195. All right, 195. Excuse me, $195.50. The 50 cents matters. Then it wound up going to a low of 163.80. And then it closed at 189.51. So that's day one. Closed 159. Excuse me, 189. $189. 189.51 cents. 189.51 cents. That's DoorDash. Now let's look at Airbnb. Do y'all think it did any better? Now I asked y'all what's the price right now. Somebody chime in. Let me know what's going on. Let me know. Oops. So I'm pulling it up. I'm not gonna put it on screen just yet because we're not gonna spend a whole lot of time on these IPOs. But I gotta make a point. I've been telling y'all not to do IPOs since Facebook. That was kind of my so-called claim to fame. I was on radio at the time. I had a show on WRD. That's here in Philly, 900 AM. They also have an FM station now. Can't think of what the dial is. But I told everybody not to buy the Facebook IPO. And a lot of people praised me for that for a long time. However, a couple people cursed me, or cuss me, as we say in my community, for not telling them when to buy in. So I missed the entry to buy in point. Can't get it all right all the time. Just being honest. All right, so Airbnb. Airbnb's open was 146. And Airbnb's, I'm almost certain of this, Airbnb's IPO price, I want to say was $68. Now, y'all should understand what open price is, IPO price, what the difference is, how it affects the average investor, people like you and I, right? Y'all should understand, because I talked about this for like 3 days last week, y'all. All right, y'all should be able to break this down. Y'all should be able to break this down. All right, so Airbnb's IPO, I'm writing it down so I don't forget, because I have so many numbers running through my head at times, they get all jumbled up. So their IPO price was $68. And their open price was $146.00. All right. Again, open price was 146 even. All right. High of the day was 165 even. Okay. So it went up as high as 165. Then it closed the day at 144.71. Some would call that a failed IPO, but that ain't none of my business. We ain't talking about that. All right. And so it closed the day. Now I'm talking about the first day now, right? Airbnb went live last Thursday. DoorDash went live last Wednesday. So a week ago, last Wednesday. All right. So if you are Mid-Atlantic, how are you, sir? So if you all are waiting, if you got questions, go ahead and throw them in the chat. If you're on Instagram, hit the little question mark bubble at the bottom. Throw your question in there so we can get to them all as we open up. As you know, every week we do Wealthy Wednesdays. This is a segment of the Finance Rebel Show. Remember, the Finance Rebel Show is all about making money simple, easy, and plain, simple, easy, and fun. Because my intention is to make money so fun, so easy that everybody wants to increase their financial IQ. So thus, we have a higher rate of financial literacy in our community. Higher rates of literacy will help you make more money and help you have a better quality of life. Why? Because money involves everything, from job negotiations to insurance prices to credit card rates. It impacts every part of your life. And we have to really get serious about not just being financially literate, but actually becoming financial masters. That's what I believe, right? It's not enough just to be literate, right? Literate is like you can read, you can put together your ABCs, you know your vowels and consonants, you know what a noun is, right? A person, place, a thing, right? You know what an adverb is. You know what your verbs are. That's cool. But when can you start putting together complex paragraphs and some essays? We ain't got to get to the book phase, but can we do some good essays? And I'm using that as an analogy to understand money, y'all. So Fix quick credit. How are you? Papaya Ness, how are you? All right, so we're looking at these numbers. We're looking at these Airbnb numbers, and we are looking at this DoorDash number. So I've been telling y'all, I do not like IPOs for average everyday investors. Like I said, I've been saying that since the Facebook IPO. All right, so that's what everybody has been talking about for the last week. Whoa, I didn't see that, Lloyd. How you doing, Lloyd? Welcome. Tilray and Alfred merged today. Oh, I need to look that up. All right, that's definitely something we can talk about. But let's all right, Don, I appreciate you. Thank you for liking, commenting, and sharing. Listen, let Don be the example today, y'all. Like, comment, and share. I'm fighting the algorithm. So the algorithm don't want me to be great. So do me a favor. The longer you like this video, the longer you watch this video, the more you like it, the more you share it, the more you comment. That lets the algorithm know that, hey, you like my stuff. You like these conversations that we do every week. All right. So Lloyd Yu says good evening. I'm about to say good morning. I told you I don't know what time it is, what day it is during this whole COVID thing. All right. And Music Man 1982. How you doing? Good evening, sir. Don Johnson says brought two staples ETFs, VTI. Two consumer staples. So what Don's talking about, he brought two consumer staples, right? That's a sector. So consumer staples is a sector, VTI and VGT. Now, VTI that's not consumer staples. That's total market. If I'm correct, because I actually recommend VTI and VT for people who don't have any idea what to invest in, but they want to start investing. So sometimes I'll have them start with the ETF, and those are both Vanguard funds. Again, these are not recommendations. This is not investment advice. These are just conversations. All right. All right, and so Mid-Atlantic asked me thoughts on dollar cost averaging. So I'm coming right back to you, Mid-Atlantic. All right, so let's finish out this conversation about that. By the way, Don, why did you buy those two? Why did you buy VI and VGT? You brought them at 75? Okay. All right, Adrian says I brought a teeny bit of crypto last Friday, and it's up $10. All right, but which crypto? There's a bunch of cryptos. Bitcoin, Ethereum, Bitcoin Lite. I mean, there's so many. Tiffany, how you doing, Tiffany? Welcome. Thank you. All right, like and share it on FB, and you're on YouTube. All right, I appreciate that, Tiffany. Tiffany, you're a real one. You hear me every week. All right, Dwight says, yeah, you have. LOL. I don't know what I said. Give me the context, Dwight. All right, yeah, we got to look that up. Right, Lisa Marie, tell her. Adrian, which one? Which crypto? All right, Don says, do you have to pay taxes on dividends in a taxable account? Yes, you do. That's a quick one. Real quick and dirty. I can knock that one on real quick. The Taxman 11, how you doing, sir? Great video today, too, Taxman. Taxman, y'all all go follow Taxman on IG. He's a tax brother just like me. But listen, I don't believe in competition. I believe in collaboration. Right? The more we collaborate, the more business we all do. So I do taxes. He does taxes. I do investments. I'm not sure if he does investments or not. But either way, he did a really good video today talking about unemployment and how many people don't realize, one, you should pay tax on your unemployment. And two, you taking unemployment may disqualify you for a lot of things because unemployment is not earned income. So Taxman was spitting some wisdom today. So y'all give him his props. But Don, yes, you do have to pay taxes on dividends in a taxable account. It's actually, though, one of the lowest rates. So it's one of the lowest rates regarding taxes. So it can go anywhere from, I want to say 10% to 20%, depending upon your AGI, your adjusted gross income, or basically, to keep it really, really simple, how much money you made for the whole year, according to the IRS, that great entity down in DC. Got you. I got you, son. I figured it out. Tables for your portfolio. So what Don's saying is these are staple investments or stable investments for a portfolio that I'm assuming that he believes will continue to do good over time. I think VGT is Vanguard Growth. But we'll look those up too, since Don put them out there. All right, so we got that one question knocked out. I'm coming back. TK, thank you for sharing. All right, so Lisa Marie said, Adrian was responding to Lisa Marie, and she said Ethereum. It's really been up for the past 2 days. IPOs, you're not a fan of the initial buy. No, I am not. And the White's been rocking with me for several years. The White's my homie, and been very helpful to me build this platform and this audience over the years. So I'm absolutely thankful to the White and appreciative and actually humbled that he, saw value in me and helped me out. But he knows my feelings about IPOs. I'm not a fan. And we're going to break that down, and then we're going to go into, I've already told y'all why, but I'm going to tell it again. Right. So we saw Dash, right? Dash IPO'd at 102, $102. DoorDash, that is, right? You know what? I forgot to get to open. Let me get to open. I know I said it, but I didn't write it down. I think it opened at 142 or 182, one of them. So give me 2 seconds. Right. So DoorDash opened at 182. It IPO'd at 102, opened at 182. The high for the day was $195, and it closed the day at 189.51. Now, who knows who got the 102 price? I told y'all that last week. Anybody remember that? Mr. Davis, how are you, sir? I owe you a call back. I know that. Anybody remember that? DoorDash IPO'd at 102. Going. Anybody got anything on that? Robert Lewis, Mr. Lindsay USA, how are you, sir? Kaizen Investor, how you doing? Real estate bully, how are you? Welcome. All right, so DoorDash again, IPO'd at 102. Who got to buy the stock at $102? Anybody remember? I'm not seeing anything in the comments, y'all. Y'all slow on the draw today. All right, so y'all must be asleep. Y'all need some coffee for the nighttime. Don Johnson for the win. Thank you, sir. Thank you, Don. Don said private investors got that price. Private investors, institutional investors, hedge fund investors, all the big boys. Curtis Davis, how are you, sir? Welcome. Right, that's right. The insiders got it for 102 and private investors. Absolutely. All right. So that price was not for us. Y'all got that? I know they say repetition is required for everything. All right. So IPO price, $102. People could not get that were trading publicly. Mom and pop people, right? The stock then opened at $182. And we're talking DoorDash, ticker symbol DASH. DASH. Remember, this is not investment recommendations. And this is not investment advice. So 182 opened at 182. First day high went to 195. So the people pumped it up, kept going even higher. All right. It closed the day at 189. So can anybody tell me what DoorDash's price is right now? Can anybody tell me? So I want to make this very clear. Average people, regular people, brought at roughly 182. That was the first price. And remember, I told y'all that the stock market is an auction. So some of it went down, some of it went up, right, for the day, but it didn't go that far down. But it went to, again, the high was 195 and it closed at 189.50. It went as low on the first day to 163. So some people might have got it at 163. Can anybody guess today's closing price for DoorDash? By the way, shout out to all the winners, the IPO winners. Last week, they got a shirt. All right, nobody knows, so I'm going to go ahead and throw it out there. Oh, Don already said it, 158. Great coming through, Don. Ms. Edith, I appreciate you welcoming your friend, Jazz Hines. Appreciate you. Thank you. So, Jazz, what are you saying? You said, why is that so? Why is what so? Let me know. Rashad Mowat, how are you? Welcome over there on IG. So DoorDash is now $158. And it closed on the day of the IPO at $189. Yes, Miss Edith, last week I said insiders got the lower IPO price. That is correct. So I say all that to say, and I'm going over this again because every time there's an IPO, people get excited. Like they get up in arms. I don't know why. But they think they're going to miss out on something. So remember I tell y'all that a lot of these stock market launches, the splits like Apple and Tesla did, these IPOs, a lot of times they are about marketing. They use marketing principles on people in the markets to get them emotionally up in arms. So then a lot of people do or try to get it on IPOs on the first day because of FOMO. Anybody know what FOMO is? Please type it in the chat. All right, so Jazz Hand says, why insiders get a lower price? Because they're insiders. Not trying to be funny or sarcastic. It's just the nature of the beast. They are insiders. So they get first dibs. That's just the way it is. That's the way it goes. I learned that many, many years ago when I was institutional portfolio manager. And I had no clue. Had no clue. Right, Adrian. So fear of missing out. So people buy these IPOs because they're afraid of missing out. So we saw that DoorDash opened, right? Forget the IPO price because the IPO price isn't for the public, even though they advertise it as such. I would say that's false advertisement. I would say we could probably put out a claim to the FTC, but imagine that. But they opened at, again, 189. It is 158 today. So where was the benefit of buying DoorDash last Wednesday, a week ago, 7 days ago? Where was the benefit? You could have bought the day. Remember I said, do not buy IPOs on the day of the open. This is exactly why. Because the prices tend to go up. This is a reason why they say, and I'm not talking about anybody, right? But y'all do know I cater to the beginners, the beginner investors, beginning folks who want to make money, who want to build wealth, who are serious about it, right? But this is why the professionals say retail investors mess up the market, because they go in and they buy without any rhyme or reason. If you're going in to buy DoorDash, right? Remember I went over the S1. Remember that's one of the ways that you go over and you do research on any IPO. And DoorDash is still losing money, folks. They have not turned a profit, at least not in the previous years. Maybe they have in this year, right? But not in the previous years. Yes, Taxman, fear of missing out. Yes, Mid-Atlantic, fear of missing out, right? So everybody's running to go buy this company that does not have a profit. And today it closed at 158. And on the day of the IPO, it closed at 189.51. 189.51. And today it's 158. So what was the point? Oh, we just wanted to give our money away. We just wanted to make the big bankers on Wall Street rich. Listen, we got to break this stuff down. It's not for play, y'all. It's not for fun. Y'all work hard for y'all money. Y'all should respect your money. You should get the most bang for your buck in everything that you do. All right. So y'all got that. That's DoorDash. That is DoorDash. Do me a favor. Share this out with somebody. Like the comments. The Early Life Project. What's up, Marvin? That's Marvin over there at the Early Life Project. Me and Marvin chopped it up today. I was on his show. It'll be airing out on his page. Everybody go follow the Early Life Project. Another black man doing this thing, promoting freedom and financial freedom as well, right? Always good to see, always good to have. We need more of them. And that is one of the reasons why I do this, right? Because remember, I just told you I started out on radio. And when I started out on radio, I really noticed that there were really no black folks talking about money in a positive way, in a constructive way, in a progressive way. you get some get rich quick people. Y'all know I'm not for that get rich lifestyle. Even though everybody says they're not get rich quick, I'm the guy who tells y'all to move slow down. All of them tell you to move fast. So again, here's an example of why we don't need to try to always move fast. And please don't confuse when I say try to move fast versus moving efficient. So sometimes, yeah, you got to move fast. Sometimes you got to walk. You got to walk it out. You don't need to run. You need to walk it out. There's an old African proverb. There was a lion and a lion cub up on a mountain, and he were looking down on a bunch of cows. And the baby lion cub said, Papa, Baba, let's run down there and let's kill them all and let's eat them all. And the father said, no, son, let's walk down there and kill. No, I'm sorry, I messed that up. Why y'all let me do that? The lion cub said, Baba, let's run down there and kill a cow. Papa said, no, son, let's walk down there and kill and eat them all. Something to be said about that. There's something to be said about that. A lot of times we're always in a rush to get things done without the proper education. And we want to run, we want to rush because we think we're going to miss out again, fear of missing out. Like we just saw that DoorDash opened at 182. Today is 158. All right. Was it worth it? Somebody tell me in the chats, was it worth it? Went for Rosie said, why so high? How you doing today, bro? Because the market is an auction block. So the people bid up for it, right? And then they let it go. They didn't want to do it anymore. So, and I talked about this last week, right? So somebody, and again, I'm not trying to be funny or sarcastic. I'm giving y'all the real. Somebody asked me, why do stock prices go up? Stock prices go up because there's more buyers and sellers in the market for it. The more buyers you have, the more aggressive or the more speedy the price increase will go. But guess what? Everything that goes up will come down at some point. Why do stocks go down in price? There's more sellers for that particular stock than there are buyers. And so the buying pressure goes down. It's just like an auction. Just like an auction. All right, so I think Adrian's the only one listening to me today. He said, nope, it's not worth it. It's not worth it. The Block Ables, how you doing? Welcome. That's right, Taxman. They just want to be first. Yep. And listen, there is something to being first to market and first on some things, but sometimes it's better to just wait, folks. It's better to just wait. Melody Alton, just want to say hello to you as well. Yes, sir. What up? We in here. Yes, sir. I appreciate you being here. All right. So Don says people love companies from a consumer standpoint and think they're good investments. Yeah, a lot of times they do. A lot of times, a lot of us fall in love with the story, and we don't know what's inside the story. We don't know how the sausage is actually made. Before you invest in anything, take some time to see what really goes into making it. Hey, Angela, how you doing? Welcome. Happy Wednesday to you, and welcome back because you were here with us last Wednesday. And I want to say the Wednesday before that. And I want to say the Wednesday before that, so I appreciate you, Angela. All right, so let's look at Airbnb, right? Can anybody tell me what Airbnb is today? What the price is today? What it opened up at? What the IPO price was? What do you think? Is Airbnb a better investment than DoorDash? What do y'all think? Ticker symbol for Airbnb is ABNB. All right, the Block Ables. Happy to be here. I'm glad you are here. I'm happy that you are here. Do me a favor, share this out with one friend who's looking to increase their financial understanding. I see a lot of people talking about free game Tuesdays, free game Wednesdays. I give out free game every day. My whole goal is to get y'all to be able to get on game so y'all can control the game. It's been far too long that we have been pawns in the game and not been able to buy the board to run the game. But while we're waiting for people to tell me what was in here, I'm going to nerd out for a minute. Right? I got a new toy. So my new toy and being an entrepreneur. Y'all gonna think this is so nerdy. Y'all gonna think this is so nerdy. So last week I got a new phone because the signal in my place is terrible and my clients be ready to scream. So I got a new phone. And then I realized by having a new phone, like a new desk phone, that I have to actually hold the receiver. And that's whack. So now I got a whole headset. This is pretty cool. I planned on testing it out earlier today, but I didn't get a chance to. So guess what I'll be doing after I get off the phone, y'all? I'll be testing my toys out. All right, so the tax man said it closed at 144. Tax man, I got for Airbnb, I have 137.99. So the day it closed at 137.99. That's what I have. Oh, okay. You know what? I might have confused you, so that's my bad. I think you might be looking at the IPO price. So yes, the IPO on IPO day it closed at 144.71. 144.71. So it closed again. Airbnb's IPO, $68, $68 even. Then it opened at 146. It opened at 146, $146. That's what it opened at. And then it closed that day at 144.71. And today it is $137.99. Did we need to rush in on that, y'all? And listen, I believe in being fair and honest. There are some IPOs that do run, and they run hard. Most of them don't, though. So yes, there's a possibility for an IPO to run on the opening day. However, the probability, right, because the difference between possibility and probability, the probability is that it will not. The probability is that it will lose value. So today it's $137.99. And so we did all that work in the beginning with DoorDash, and now we can just kind of run through it. All right. So listen, y'all, I hope I'm just not up here talking till I'm blue in the face and y'all not taking heed to these words. I'm giving y'all examples. All right. Y'all know I love the stock market. I love business, right? And I love business because I think it's like one of the highest levels of art, right? There's an art to business. And in the stock market, that's like the highest level that you can see. And that's part of the reason why I love it so much. But listen, me sitting up here talking to y'all blue in the face does no good for anybody. What does good for folks is you take the words that are coming out of my mouth and put them into action. We got to be accountable for our word. We got to be actionable with our word. All right. We got to be bold with our word, with our life. We got to be beneficent to folks. We got to be consistent, and we have to be courageous. The ABCs, y'all. ABCs. So let's go through this. All right, so Don Johnson speaking to the Early Life Project. Listen, everybody go follow the Early Life Project on YouTube. Subscribe to their channel. All right, Winifred, I hope I answered your question. I try not to leave any question lost. No questions left behind. All right, and this thing jumped on me. The questions and comments jump on me sometimes, y'all, so bear with me. Yes, Mosquito says, I told you don't buy first day IPOs. All right, somebody's paying attention. It's not for play. No, it's not for play. Nope, it's not worth it all. Don says DoorDash isn't worth it because it's not a good company, in my opinion. But they're the market leader, right? They are the market leader. So why do you say they're not a good company, Don Johnson? What do y'all think on Instagram? Do y'all think DoorDash is a good company? Do you think it's a bad company? All right, Chili says some people may have not got motivated by brand DoorDash. Oh, so I'm sorry, I misread Chili's comment. How you doing, Chili, by the way? Welcome. So Chili says some people may have got motivated by brand DoorDash. Yeah, a lot of times they get motivated by the brand. Now, I was born in the 70s, y'all. So anybody remember what's happening? And I think I've told the story before. Anybody remember the episode about gambling when Dwayne kept winning all the football bets. He kept betting on the football teams and he kept winning. And they thought Dwayne was like this virtuoso, this genius guy that just had football down. And then they said, Dwayne, how are you doing this? How are you making this possible? Now, before I go any further, does anybody remember what's happening with Rerun and Roger? Or am I dating myself? Miss J25, how are you? All right, so anyway, Dwayne was on there and he said, I just picked the prettiest helmets. Whoever has the flyest helmets, that's all I pick who's going to win the game. And that's how I win the bet. Do y'all think that's a sound way to pick football winners? Excuse me for my corny jokes, y'all, but, I'm showing my age here. But it's the same principle, though, right? Chili just said people bought DoorDash because they were enamored by the brand. Dwayne wasn't enamored by the helmet or the uniform, and that's how I bet on them. That's how a lot of people pick their stocks, sadly. And it might be good for a little while. They might have fun for a little while. And then when it hits the fan, it's not fun anymore. It's not fun anymore at all. All right, so, okay, Winfrey said, I thought it behooves companies to keep prices to attract more investors who could afford it. Yeah. So here's the thing again. It's an auction. It's an auction. It's controlled by the market. It's not controlled by the company. Right. So, yeah, the companies will sometimes do some funny accounting shenanigans and they will play again on the fears of the people that will keep buying. But fundamentally, it's an economic thing, supply and demand. And what's behind supply and demand? Buyers and sellers. And so if you understand some of these economic principles, you could begin to put some things together, put some pieces of the puzzle together as it relates to the stock market. It's not always like that 100% of the time, but 90+%, I would say it all falls to economics to some degree or another. Now, sometimes it might be more short-term. Other times might be long-term in terms of being in sync or out of sync. Like right now, the market, the stock market is not in sync with fundamentals at all. It's not in sync with economics at all. It's just doing its own thing. It's running off of pure emotion. That's it. This year, good time to get into stock market Cash App tools. So are you saying it's a good time to get into Cash App? To use Cash App to buy the stock market chili? If that's the case, I've been talking about that for forever. Been talking about that for quite some time, sir. Some people listen, some people don't. All right, so Adrian Anderson says, and I think I'm missing some questions. Who is Felipe? I hope I'm saying your name right, but welcome over on IG. All right, Adrian Anderson says, what's your thought that the multitude of people staying at home are driving the market via Robinhood and other ads? I hope that makes sense. Yep. And I kind of just talked about it, right? So Robinhood is for retail investors, average everyday investors like you and I. Yes, average everyday investors are jumping into the market, buying all kinds of stuff based on the color of a helmet, based on how pretty the helmet is. I'm seeing it. I'm seeing it on social media. I'm seeing people who have never talked about stock in their life, never worked professionally in any form of finance, and that are now giving investment advice. So we have all these quote unquote financial gurus, and sure, you can throw me in that lot as well. But we have all these financial gurus, and they're telling people to do stuff, and people do it with no research. You have to do your research. You have to do your homework. If you're not doing homework, if you're not doing research, you're just gambling. You might as well go to a casino if they're open anywhere. I don't know if they're open anywhere. What were we talking about, Chili? 153 previous open, 127 today. I'm not sure what we're talking about. Bring me up to speed, Chili. Yes, Airbnb is 137.99. That's what it closed at today. Open 125.83. Was that Airbnb? I didn't look at all the numbers. I just looked at yeah, Don Johnson says 137, and I would definitely say it's better investment than DoorDash. I think so too. I do think Airbnb has some potential. But as we get locked in to staying home more, to being locked in place, DoorDash has a value prop too. And I think the more that happens, the bigger the brand becomes, kind of going back to Chili's point, and the more people will order. Now, I do think once we get back outside, because we have vaccines, you're going to see a mad rush of people go out, buy stuff, do stuff, travel places, do things, go places, see people. But then I think some of us are going to kind of revert back, because I still feel that a lot of us are scared to move around and about. A lot of us do not want to get the vaccines, even though a lot of us will get the vaccine, but a lot of us do not. So I think DoorDash has some legs, but I would, if I was a betting man, I would bet on Airbnb over the next 10 years. Remember, everything here is long-term oriented. Over the next 10 years over a DoorDash. But weirder things have happened. Ashley Blair, how are you? All right, so Chili says Airbnb good long-term stock, 66 million rooms available. Yeah, and they're probably going to be adding on more, because I believe more people will be looking for other ways to make money. Can you break down what Ebitda is? I'm trying to see how to use that when valuing a company. So earnings before interest, depreciation, taxes, and amortization. So that's what Ebitda stands for. It's also kind of a nickname for net profit. Kinda. By the way, Alton didn't tee me up. He didn't clue me in on that before. I just kind of knew it offhand. Ebitda, earnings before interest, depreciation, taxes, and amortization. All accounting terms. Jedi Mace Windu, welcome. How you been? So I think the way you use that, well, I don't think. The way you use that is you want to compare that. So what is the 2019 Ebitda for, again, DoorDash versus the Ebitda for 2019 for a Airbnb? Two different industries, right? So when you're comparing two companies next to them, make sure they're in the same industry, or at least have some comparisons, right? Because you could argue that, let's say, Microsoft and Google are in different industries, although they overlap. They both are major in cloud storage, but so is Amazon, right? So you have to be careful about that. Winfrey says still seems like it's too high, like it's pricing investors out. What stock are you referring to, Winfrey? Am I saying your name right? I don't want to mess your name up. Is it Winfred Rose? Just let me know. I don't want to mess your name wrong. I hate that. I think everybody knows that by now, right? Bridget NEG, how are you doing? Welcome. Happy Wednesday. One Love Project, how you doing? Welcome. All right, so let's get through some more of these questions. Give me 1 second. Thank you, Zita. The headset is nice, right? My director wants to buy me one. Yeah, I hate holding the phone. I'm really not a phone person. Believe it or not, I really don't like the phone, but yeah. Okay, so you said, Winfrey said, oh, art, I'm better with science. Yeah, a lot of them go hand in hand, though. Alnisha, what we talking about? Don't be coming on here trying to besmirch my name. Alnisha is my tax sister, y'all. Everybody say hello to Alnisha. She's good, folks. I'm guessing you don't remember the price. All right, Tara says yes. It was TGE. What are y'all talking about something different? Uniforms? I thought he liked the uniform. Oh, y'all talking, okay. Y'all talking about what's happening. I thought it was helmets. It was helmets or uniforms. Either one. All right, Tara, you showing your age then. If you remember, the white I think got me by like a year or two. So he's definitely showing his age. Alnisha, okay, I got it. So you must not remember. They didn't let you go outside when you was younger. Nails by Trees, how you doing? DL Store, how you doing? Welcome. Happy Wednesday, y'all. All right, Don Johnson says they are the market leaders of a race with 1,000 horses in it. I see no competitive advantage or moat. Oh, no moat currently. So moat, does that everybody understand when Don says moat? Moat is basically competitive advantage a company might have. Warren Buffett talks about economic moats or business moats or company moats. And so I'm trying to think of one. All right, here's an example. It's not the best example, but most defense stocks, like your General Dynamics, or like even a Boeing to a certain degree, because Boeing does some defense work, or Lockheed Martin. Your average everyday person is not going to be able to start a company in that space. Why? One, they don't have the money. Two, they don't have the connections. Three, they don't have the clearance. All of these projects need some type of government clearance in order to work on them. So it becomes a little hard. St. Andrew's Finest, how are you? Stacy, how you doing, Stacy? So that's a example of a moat, right? Apple, you could use as another example of a moat. Apple's technology, the way they combine technology and design, makes them better than most tech companies. Now, you have some people who are, Android fans. They can't stand Apple, but at least in the United States, they are nowhere near Apple. Worldwide, it's a different story. They definitely outweigh and outsell Apple phones, but Apple phones have such a great margin that they're still worth more than Google to this day. Even though Android sells way more overseas. So that says something. All right, so Alton says, I say break down a company financials to see if they're actually a good company, even though it doesn't matter sometimes. It matters all the time. That's blasphemy, Alton. Always matters. For this context right here, we're talking investments, so it matters. Not only are we talking investments, we're talking about long-term investments. So when I'm talking about investments here, I'm talking 10 years or more. I don't have time for short-term stuff. And there's a reason why I do that too. I feel as a community, Black community, I feel as in this American society, we are so prone to be microwave programmed, microwave oriented. And oftentimes we're so microwave oriented that we miss out on real opportunities and gems because we don't have a long range perspective oftentimes. That's not everybody. It's a general statement, but we're talking long term. So financials always matter. Why do financials always matter? Because if a company doesn't make money, they will not be in business too long. And if they are not making money and they're still in business, that means they're getting a lot of VC money, venture capital money. VC are the people that kind of back new, exciting companies that are coming to market. In exchange for their money, they get a piece of ownership. So, that brings in a lot of different factors. All right. Oh, it was uniforms. All right. Now y'all going to make me go back and try to find that episode. All right. We can go with the uniforms then. Okay, Ms. Edith, you remember what's happening? No, not a sound way. Okay. The tools like Robinhood, Cash App, Webull are great tools to learn trade. Yeah, but we all talk about investing. But I know what you mean, Chili. But I'm being really technical for a reason. I'm being technical for a reason because everybody's talking about trading. Everybody's talking about day trading. Everybody's talking about getting rich quick, overnight get rich quick schemes. We don't need them. This market is going to crash at some point, y'all. It's not going to keep going up. Everybody at some point, y'all, mark my word, is going to be like, man, this market is scary. I lost all my money because I just brought something some financial guru told me to buy, and I didn't do my research. I didn't understand the company. I didn't understand the what, when, why, where, how, right? The basic questions that everybody should ask about any investment, any person they're going to date, right? Any investment they're going to buy or invest in, or any stock they're going to invest in, they should be asked those questions. But I have an account at Robinhood. I have an account at Cash App. I have an account at Webull. I kind of use them all, but they're okay. All right. So Winfrey said, "What's the strategy with stocks that pay dividends?" Ooh, wait till y'all see my new shirt. It's about dividend stocks. All right. So it says, "What's the strategy with stocks that pay dividends, and is it realistic to own enough of them of being a residual income?" So, Winfrey, since I know we've had many conversations about money, I don't know what you would consider to be realistic. I think it's realistic. That's why I buy dividend stocks. Again, it depends on what your time horizon is. One of your most important things when you're investing is what is your time horizon. Do you need the money tomorrow? Do you need the money in 5 years? Do you need the money in 20 years, 30 years, 40 years, 50 years, right? I'm in my 40s. I don't plan on ever retiring. Now, the universe, God, the creator may have different outcomes for me, right? But let's say all things equal, I'm fine, I'm healthy, I'm juicing, I'm drinking plenty of water, right? I'm taking care of my body, I'm exercising, so I get granted some extra points to stay a little bit longer. So since I'm buying dividend stocks today, by the time, let's say, I'm 50 or 60 or 70, my dividend stocks will be able to replace my paycheck that I get from running my business. And I can just live on those. A lot of people do it. I'm on an app called Clubhouse. I don't know if anybody's on Clubhouse, but I was having a conversation with, I won't say their name, even though they said it publicly, I won't say their name. They run a business, they're heavy in real estate, but they also buy a lot of stocks. And what they said was they generate up to 7 figures in dividends from their stocks. That's their kind of lazy money. This person, it's a lady. I don't know them super well, but it's a lady. And they have a business. And I'm assuming they're doing pretty good for themselves. They're doing really good for themselves. But again, they're not that much older than me. So I think they said over the last 10, 11 years, they built up this position. So they've been able to take advantage of the growth of the stocks plus their increased investment in it as well. So you definitely can do it. It's definitely realistic to build out a residual. It just depends, again, on what your time frame is and when you plan on doing it. Shan Thomas, how you doing? Welcome, welcome, welcome. I am Just Dane. How you doing? Welcome, welcome, welcome. This is Wealthy Wednesdays. This is the segment of the Financial Rebel Show we do every Wednesday where we just answer everybody's money question. So go ahead and throw your question, your comment, your concern in the chat. We'll address it. We'll talk about it. The whole reason why we do this is, 1, to make money cool, right? 2, we don't see a whole lot of black folks talking about money, right? So I'm looking to fight that barrier as well. And 3, my hopes are for people to be able to up level and understand money at a higher level, better level, to be able to take more control over their finances and their life. The better you understand money, the better you can direct your money, the better your life will be. I'm not saying money is going to make you happy. Money does not make you happy. However, understanding how to use money, because money is merely a tool, can help you use the money to make your life better and the life better of the people in your family and your community. All right, so where are we at? Y'all know these things be jumping on me. These comments jump on me. Chili, some more up there. And I'm looking to see what it is. Oh, no. All right. I was about to go off on you, Chili. I thought you put a prison stock up there. I'm like, we don't talk about prison stocks. Hate prison stocks. Well, okay, so this is a great question here. Good question. What is the knowledge base required to invest in dividends? So the knowledge base required to invest in dividend stocks, to me, in my opinion, is 1, you learn to understand the markets through and through, right? And then after you learn the markets, you understand the different companies and the different stocks. How does a company make money, right? Because remember, every stock is just a piece of a company. That's all it is. We talk about it in a very flamboyant fashion, but it's ownership in a company. Some companies are flashy and flamboyant. Some companies are boring. There's a saying around there out there that Warren Buffett says he only wants to invest in companies that can be run by a bologna sandwich. He says he didn't say that, but he does believe that theory, right? It doesn't have to be super complicated. That's why he avoided tech for so long. But he still made a boatload of cash during that time. But again, I would say, begin to start understand what makes companies tick. And all of us kind of innately understand what a good company is. We can view it. We can say, oh, they're going to continue to make money, or they might lose money, or they're not making super duper great decisions. Again, it doesn't have to be super sophisticated. You don't have to understand math or be a math whiz or break out super duper algorithms. It could just be, hey, These guys make a great t-shirt. People like wearing their stuff. They know how to sell their stuff. They sell their stuff all over the United States, and they're looking to expand overseas. Oh, by the way, and they're also using overseas ambassadors for marketing. I mean, it could be just that simple. Look at Coca-Cola. Coca-Cola has been around for over 100 years. Why is Coca-Cola such a dominant force? There's over over a billion with a B, a billion Cokes sold daily, not annually, daily. Why? They got a great business. People like the product. They still sell more Coke. Coke still sells more than Pepsi. Pepsi makes more money than Coke, but Coke still sells more than Pepsi, the soft drink. Why? It's a good thing to look up. One of the things you also want to be when you're getting into investments is really curious. Don't be afraid to ask why. How does that work? I mean, there's a lot of resources out here, especially now with technology giving us access to investments. Again, I'm not telling everybody to take your whole paycheck and throw into it, but if you can take $10 at a time, $25 at a time, and consistently keep building, you can build up a nice nest egg. I show stocks that I bought for $1. You only need $1 to start investing. To start, right? So keep that in mind. Winfrey, let me know if I answered your question. But again, I would understand the markets, how the markets work. I would understand the companies that you're going to invest in, right? I would say start investing in what you know, what you like, things like that. If you buy Apple phones or Apple products, maybe you invest in Apple. If you like Nike sneaks, buy Nike. Start slow, invest slow. It's not a race. This is a marathon, people. It's a marathon. Adrian says, what's odd is that Carnival Cruise doubled to 20. Something from when I brought it this spring. Who's cruising? Now I know people are flying and my airline stock is doing pretty well. But cruising, listen, the whole market is on vaccine juice right now. It's hopped up on vaccine juice. So the vaccine works, right? And you get mass adoption of people taking the vaccine, and we have a cure and it actually works. What do you think people want to do? People tired of being inside. They want to get back to work. They want to get their businesses back open. They want to get back to frolicking around and doing some things and having some fun. Cruise stocks will go up. When, I don't know, but I would look long-term at them. All right, so Winfrey says, no problem. No problem with name. Okay. All right, dividend stocks are great. I own T, VZ, AMT, and CCI. So I thought CCI was a prison stock. So I was like, no, he didn't talk about no daggone prison stock. No, I hate prison stocks. I do believe that we can't knowingly invest in the things that do harm to others, though. And that's a very, very tricky situation sometimes, right? Because, there are some insurance companies and there are some banks who knowingly still say it to this day, openly benefited from slave trade. Now, it was like 10 companies removed because they brought a company that brought a company that brought a company, but yet and still, they still profit off slave trade. So their riches are still linked to the enslavement of our people many, many, many centuries ago. So I don't necessarily consider that ongoing treatment or mistreatment. But prisons, and I talk about this often, are currently doing bodily harm, mental harm, emotional harm, intentionally, right? They're not trying to be good stewards of these people that they're taking care of in their facilities. So I say, to hell with them and their investments. All right. What's the knowledge base required to invest in derivatives? You don't need it. Avoid it. We ain't doing that. So Winford, my whole thing is all about base investments for the beginner. Base finance for the beginner. Derivatives is like super duper advanced. Not to say that you can't make money. You can. Not to say that, it's wrong. It's not. It's just like riding a bike, right? When you first start to ride a bike, you usually ride with training wheels. If you learn to not grow or learn how to ride without training wheels, you usually get bruised up. I also say sometimes too that, when you first get your driver's license, you don't want to give a Formula One or a NASCAR, or give the keys to a Formula One or a NASCAR to a 16-year-old, right? Take your time. More than likely that 16-year-old or that newly minted driver's license for the person who got it, they're going to crash because they can't handle the speed. Derivatives move very fast. Move very, very fast. Dwight says precious metal ties to insurance. They're talking about hedging, Dwight. I'm not totally sold on it. I know the folks are. Everybody that likes it there's no hate. There's no hate. All right, so Alnation says, I don't remember the show from the 70s. I'm young. Let me live. Don't besmirch my youth. So listen, again, Alnation's my tax sister, right? So there's a group we're in, and we have a good time. We vent sometimes. We get into our shenanigans, and I was picking on, I wasn't picking, but me and another tax thrower having fun. So I made a video and I said they besmirched my name. And so it's like now my name is like Kamari Besmirchment Ellis in this group. It almost seems like I probably should change my name to that. All right, so Adrian says the only moat I know of was water surrounding a castle. Thanks for the new knowledge on it. But on it, Don, yes. But the water surrounding the castle, and again, Adrian, I've talked about this several times. That's what is based on, right? The lizards and the alligators and the dragons in the water around the moat, protecting the castle. And there's a drawbridge, right? So you got to be really, really good to get on the other side of that, to do that. Get on the other side of that moat to destroy that castle. There is a video floating around of Warren Buffett actually doing a really good job explaining that. I'm going to post that in the Finance Rebel group. If anybody is around and not in the Finance Rebel group on Facebook, you should go ahead and join. It's free. Just answer a couple questions and you can get access. We talk about money all the time, right? Because remember, you can't just all of a sudden watch one video, read one book, go to one seminar, and then become a financial guru. It has to become a habit. It's got to be part of your lifestyle, right? You don't just do it by accident. You got to be very, very intentional. Just like basketball, martial arts, boxing, handwriting, anything that you want to do and you want to do well, you have to put some time into it. There's no shortcut for that. There's no pill for that. It doesn't matter if you take the red or the blue pill. If you don't put the work in, you won't get there. All right. Tiffany, you don't do Apple? Oh. All right. Apple, good stock, pays dividends. Night 2. Yep. Absolutely. All right. So yeah, I got another supporter here. Don Johnson says he thought Dwayne was betting on the helmets. All right. So can somebody do me a favor? Can y'all Google it? What's happening? The episode where Dwayne was betting on football teams. Was he betting on the uniforms or the helmets? All right, so Don Johnson says that's why I'm heavy on buying the index. So Don earlier in the program said he brought VTI and VGT. They are both ETFs over at Vanguard. All of Vanguard's investing is based on an index, right? That's just a list of companies that the portfolio manager is slated to follow. Right. So let's say you give me your money and y'all say, I got to follow the S&P 500 index. I can only buy these companies that are S&P 500. That's what I have to do. So that's what they mean by following the index. At some point I'll do a show called passive investing versus active investing and which one is better at some point. All right. So Shan said truth. Shan Thomas said truth. I missed the point though, so I don't have the context. The Taxman 11 says, are those dividends multiplying via compound interest? I mean, technically it's not compound interest because they're getting dividends, but the power of compounding is still at play. All right, so are tax implications different for qualified and ordinary dividends? Yes, they are. And you caught me flat on that one because Alnisha or either Taxman, either one of y'all, what is the difference between qualified dividends and non-qualified dividends or ordinary dividends? I can't think of that off the top of my head. They get taxed differently though. I do know that. All right, so Melanie Allen says what I meant by it not mattering is on the consumer investor side, and how people will invest off of hype and say a company is or isn't a good company based off of its feelings and not research financials, right? So they won't do their research and they'll say it's a good or bad company, right? And so I kind of talk trash with y'all a little bit because people talk trash about my Ford holdings. Don, my boys were dogging me over my Ford. They couldn't see the rhyme or reason, but they hadn't done the research either. And they said, oh, Ford's trash. Okay. And that's why I always say you have to develop your own process and be cool with your own process. It's like having your old lady, right? Somebody down the street might have a new young lady. She might be the new hot thing, but it don't matter. Yeah, she might be nice looking. She might be smart, but your old lady's your old lady. Tried and true. Stick by your old lady. Zen on Concierge, how are you doing? Hey, kid. Welcome. Right. Qualified dividends get capital gains. Thank you, Taxman. All right. Adrian says, that's why I'm holding for the long term. Is it worth it to buy bonds for a long-term hold? And do you research them like companies? So yes, you can research bonds like companies. Actually, there's a whole theory behind it that sometimes it's better to buy the bonds of a company than the stock. But we won't go into that tonight. That is not beginner stuff. However, bonds right now are trash. Some bonds, I should say. The 10-year treasury, I don't even think is above 1%. You know what? Let me take that back. Bonds are not trash. Bonds are never trash. Bonds, all investments serve a specific purpose. And so if you are nervous, if you are wondering where the market's going to go, you put your money into U.S. Treasury bonds. All right. So the 10-year treasury right now is 0.93%, a little under 1%. So you're going to get back a 1% return. And guess what? When interest rates go up, the value of that bond is going to go down because there's an inverse relationship. Now, I'm not going to go too deep into that tonight. Y'all can research that one. That could be some homework for y'all to see what I'm talking about when I talk about the inverse relationship between bond prices and bond interest. They move in different ways. Miss Tia's World. How you doing? Welcome. Happy Wednesday. Today is Wealthy Wednesdays. This is the segment of the Finance Rebel Show where I answer all your questions live, right here, right now. All right. So if you have any questions, go ahead and throw them in the question mark box on IG. If you have any questions, go ahead and throw them on in the comments or the chat. If you are on Facebook or YouTube, we broadcasting everywhere. We worldwide, baby. All right, so Winfrey said I moved my 401k account to strictly bonds, anticipating crash of stock market. Is that sound? It depends on your outlook. It depends on your strategy. So, for example, when the market crashed this year in March, and let's say you went to bonds, which are basically kind of like cash, it's safety, and you never went back into the market, you missed out on great gains. The stock market is still up, I want to say 14, 15% year to date, measured by the S&P 500. So the S&P 500 is up roughly 14 to 15% year to date. So if you went to bonds, depending on what type of bonds, it's you might have lost some bread, but you still got some safety, right? And listen, y'all, safety is important. Safety creates peace of mind. Safety creates peace of mind. So let's think about it like this. When I was younger, when I walked to school, sometimes I would get into fights. Or when I walked home from school, sometimes I would get into fights, right? You never know what's going to happen. When I was growing up, kids don't fight no more these days. But it is what it is, right? So I never know what's going to happen. So I could take one route and go one way that I might fight, or I could take another route that's a safer route, but it's also a longer route because I'm going more out of the way. Same thing with stocks, same thing with bonds. The stocks, sometimes you might have to fight. That's when you see the market crash, right? And then you got to fight your way back up. It's the same thing. Hope I didn't lose y'all with that analogy. All right. Let me see. All right, Don Johnson. The one thing I would say about dividend paying stocks is not to buy companies only because they pay dividend. Yes, Don. Yes. Yes, Don. Yes, that is a fact. Do not just buy a company because it pays a dividend. So here's an example, right? Using me. Earlier this year, I brought Ford. Ford was paying like an 8% dividend, 8.9% dividend. I didn't think they were going to be able to keep the dividend, but I would be willing to take it if they did. They wound up suspending it. Had I just brought Ford for the dividend alone, I would be really pissed off. I'd be really mad. But I brought it. The dividend was cool. It was a factor. It was a small factor, right? But I also saw the potential growth in some of the partnerships with with Volkswagen, and their strong position in trucks, like the Ford F-150 and things like that. So my thesis, my rationale for buying, factored in dividends a little bit, but I also kind of knew that the dividends might get suspended because of the economic environment we were in. So, and that did happen. But again, I didn't just buy it for the dividend. All right. So Melanie Allen said just found a good dividend stock with IIPR. I think IIPR is the weed stock. I think. Right. Innovative industrial properties. Or is that a REIT? So let me pull that up real quick. Let's pull it up. So anytime you want to know anything about a stock, right? I would suggest you all download these apps. Finance.yahoo.com or Finance Yahoo. That's an app. And you can also download CNBC. All right. So I'm on CNBC right now because I went there to look up the 10-year. So Innovative Industrial Properties is a real estate investment trust. It's a REIT, REIT. The company is focused on acquisition, ownership, and management of specialized industrial properties leased to state licensed operators for their regulated state licensed cannabis facilities. It acquires properties through sale, leaseback purchases, and third-party purchases. The company partners with, it expanded on me. All right, sorry about that. The company partners with medical use cannabis operators and serves as a source of capital by acquiring and leasing back their real estate assets, in addition to offering other real estate-based capital solutions. It partners with licensed operators across all product types: cultivation, processing, distribution, and retail. That's the whole vertical stack of cannabis, y'all, if y'all weren't paying attention. All right, basically that's the whole cannabis industry, right? From growth. Well, cultivation is the growth. The processing is when you take the marijuana and you get all the goodness out of it. Distribution is how you move it to get to the retail places, and the retails where people go to buy it. All right. The company owns approximately 63 properties located in over 16 states, totaling approximately 4.9 million rentable square feet. 4.9 million rentable square feet. So they got some land. And I think I talked about this last week, the whole picks and shovels theory of investing. Well, clearly IIPR is kind of doing a picks and shovels play when it comes to marijuana. Kirk Keys is in the building. What's up, bro? We were just DMing today. Showbiz. What's up, Ken? How you doing, man? How y'all feel? Y'all gonna hang out with me for a little bit? So Alton, that's a good play. I think it's a bit overpriced. But I do think it's a good play. I know cannabis isn't going anywhere anytime soon. It's like a $344 billion industry worldwide. By the way, I just released a video on cannabis, so y'all watch it. Tell me what you think. The title of the video is called The Best Ways to Invest in Cannabis. So that is on my YouTube channel right now, so you can check that out. But Alton, I don't think that's bad, bro. I don't think that's bad at all. I'm glad you're on the lookout and on the prowl for some good companies that are paying dividends. I'm trying to see what the dividend yield is on this. Alton, what's the dividend yield on it? Or did you put that in the chat already? Give me 1 second, 1 second, 1 second. I don't see it. Don't see it. Give me 1 second. Un momento. Right. So the dividend yield right now is $2, 2.8%. And so the price of IIPR is $182.23. It was up 3% today. I wonder what triggered that move. All right. And it pays $4.96 per share, again, which is a 2.80% dividend yield. You still won't get that rate of return and interest by putting your money in the bank. So if you're looking at it from that standpoint, it's not bad. It's not bad. I haven't dug into that. I just know it's a weed play. And I think it's probably one of the better weed plays because, again, they're not directly invested into weed. By the way, weed or marijuana or cannabis, whatever you want to call it, it's still not legal on a federal level. So you still kind of have to proceed with caution. Chili says, does it make sense to invest in Bitcoin? I invest in stocks. People think it's easy to invest in Bitcoin, but it takes just as much intelligence. Does it really? I mean, I can go on Cash App and buy Bitcoin too. Matter of fact, I have gone on Cash App and buying Bitcoin. There's a meme I put up on my Instagram. So for years, all the Bitcoin fans have been after me, y'all. They've been wanting to tee off on me and swing on me for a minute. Like I said, sometimes when I would walk home from school, I might get into a fight. It's the same thing with Bitcoin. You know, they've been teeing off on me because I've been talking trash about them since the big bubble, and it was a bubble when they touched or just about touched about 20,000 3 years ago. And so they've been waiting. And so now they in the prime, they in position. They talking trash to me. Some of these Bitcoin fans are my DMs heavy, y'all. So just know I'm not just battling with people that love the stock market, hate the stock market, love stocks. I'm also battling some of the Bitcoin people. But I'll say this, Bitcoin is run off a blockchain. I don't really have a whole lot to say about Bitcoin. I will say this, though. I'm super duper enthusiastic about blockchain. Blockchain is a technology that runs Bitcoin and that will probably run any other cryptocurrency that's running behind it. So I'm still kind of looking at all the companies or some of the companies that are using blockchain and implementing blockchain in their business. To me, that's where the role play is. I mean, Bitcoin will probably become a winner, but so will Ethereum. Who brought Ethereum today? Was it you, Adrian, or the other day? So, I mean, those are kind of the big boys. When it comes to crypto, those are number one and number two. And any of them could win the battle over the next 5-10 years. Who knows? But blockchain will be here to stay. So I'm looking at blockchain. All right, so Winfred asks, so what do you charge to oversee someone's IRA? So I don't really oversee anything. I used to. Years ago, I let go all of my licenses. I had a 6, 7, 65, life and health. I could do all that, but I gave it all up because I used to get in too much trouble. I'll tell y'all about that another day. And so I might consult you on your IRA, Winfred, and give you some tips, tricks, maybe some strategy here or there if you need it. And I might charge you a flat rate for that, but I don't really oversee anyone's IRAs, so to speak. Chili says 4 position themselves for EV market, although hit NIT first. What are you saying? But yes, they are definitely positioning themselves for EV. They've been positioning themselves. $5 stocks, not sexy, but does make money. Oh, $5 dividend. You talking? Yeah. Hey, Jody. What's up, Jody? My Jody. How y'all doing? How you doing? All right. Don Johnson says, what I'm scared of is the military isn't required to take the vaccine yet. Really? I would think they would be one of the first ones. That's interesting. All right, Jody says Apple. So what are you talking about? Apple pie? You want to make me some apple pie? What are we talking? Apple stock? Apple and Nike stock goals. All right, so buy some. You got $5? Buy $5 worth of Apple, buy $5 worth of Nike. Problem solved. Mission completed. We are on to the next. Buy your next $5. It ain't hard. It ain't hard to tell. It's not complicated. Our Nation says, I didn't come here to work. But here we are. Qualified dividends are taxed at a lower rate. Thank you. Capital gains tax rate. Ordinary are at your regular income tax rate. Thank you. That is correct. See, we're just helping. You just did a great service for the people here, for the community. You helping black people today, sister. All right. So Winfred Rose says, how would you know stock market has bottomed in the case of crash? So at that point, to move my 401k from strictly bonds to strictly stocks. Well, here's the sad part. You never know if the stock has bottomed until after it's bottomed. So, quick story. In 2008, 2007, when we had a big crash, the Great Recession, the firm I was at, we moved all our assets to cash. People loved us. Why? Because we averted the big crash, especially the one that happened in October of 2008. However, 6 months later, after October of 2008, you had the bottom, which was like March 10th, March 11th of 2009. Missed that. Totally missed it. And then guess what? People love this, but then that love turned to hate. It's a thin line between love and hate. So people were not happy that we missed it. Can't always get it both ways, right? So you just had to study it, and you had to become a really good student and pretty proficient at understanding crash or booms and busts. And then you kind of make educated guess. And so you also said, so at that point, to move my 401k from strictly bonds to strictly stocks. What I would say, though, is maybe you don't just do strictly bonds or strictly stocks. Maybe you do a mix, right? Maybe you should work on the asset allocation where you have some stocks and some bonds. Then that way you can take advantage of the market move up if it moves up. If the market kind of goes sideways, you can still take advantage of the dividends that the stock pay out. You can still take advantage of the bonds that pay interest, right? And if the market falls, your bonds won't tend to move or fall as hard as a stock will. So I would look at the overall asset allocation. Oh, if there's an eviction crash, what should you invest in? If we having a major eviction, because I know there's like several billion, I mean, some people are saying trillions of dollars in the rental abatements or rental moratoriums, and that's going to be up in January. In January, I would probably say go to cash, because I believe that everything's going to go to hell in a handbasket real quick, temporarily. Then we'll have another bounce again. And it'll be hard to kind of time that. And again, one of the reasons why I am long-term focused here for beginners is because you can't time the market. No one can time the market. If they tell you they can time the market, they're lying. I'm pretty good. I can't time the market. I might get lucky here or there, and I will admit that it's luck. But to do that consistently, it doesn't happen. So sometimes you get in early, sometimes you get in late. Sometimes you move early, sometimes you move a little late, and you just have to deal with it. But it's a process. It's over and over and over again. And I don't know. I think Congress will do something about that. Not sure. Still dealing with the effects of the Cheeto Hitler residing in the White House. So I don't know. Bitcoin's going to 100K. That's not my comments. Right? Those are not my opinions. Those are opinions of the audience member, Don Johnson, who's always there every week. All right, Melody Allen said, the same day you released that video is the day I picked this one up. Okay. That wasn't what I told you in the video, though, but I'll take it. I like it. Got you thinking, got the juices flowing. Adrian Anderson says, take notes to go and research blockchain. Yes, go and research blockchain. Yes, Don, I know you're in the military. Maddox 12, how are you? Welcome. Happy Wednesday. Sir King, how are you? Welcome. So listen, anybody have any other questions? Y'all know it's Vittles time. I was fixing to eat. I was hungry. So get y'all questions in. I'll take 2 more questions and then I'm out, y'all. Then y'all got to catch up with me on Saturday at noon. Y'all know we do the wealthy conversation section of the Finance Rebel Show on Saturday at noon. So I haven't figured out what the topic's going to be, though. Y'all know every Saturday we have an in-depth conversation, wealth-based conversation. But they're always wealth-based conversations, right? Some way, somehow. All right, Maddox 12, no questions. All right, anybody else have any questions? So Adrian says, I need to wait and see on this vaccine thing. In terms of investment or actually taking it? What you got? What you got? Anytime, Winford. Anytime. Winford, have I made you a believer in capitalism yet? Or are you still, is the verdict still out? Why am I eating so late? Well, I'm eating so late because I'm a fat boy, Kurt. I'm trying to get out the fat boy club, but it takes time. And a lot of times when the family eats, right, or when the food is ready, I'm doing this. So I've been on here since like 7:50ish. And also sometimes I won't eat before we go on because I get the itis. So I don't want to get tired. Would you want to see me nutting off like I'm from Kensington or something? All right, so Winifred says democratic socialism benefits more people. Depends on who's running democratic socialism, right? At the end of the day, any economic system will only be as good as the people. And people aren't that good, sad to say. So, I know a lot of times we get caught up in these labels or these systems. They don't matter, to be honest. And I'm not trying to be dismissive or anything like that. It really matters about the people. The people is what matters. The people that are running these systems. And then the people that are keeping these people accountable to run these systems. So, it is what it is. It is what it is. But I know a lot of people, because of the propaganda machine, don't understand what democratic socialism is also. So that is another thing for another day. So no questions, no comments, no concerns, nothing thrown in the chat. All right, so it's time to wrap up, y'all. Time to wrap up. Time to go home. Heading to breakfast. All right, y'all. Well, I appreciate y'all being here. Happy Wednesday to everyone. I'm appreciative and honored that you all show up every week. We will be back on Saturday at noon for Wealthy Conversations. I'll figure it out. But if y'all have any suggestions of any topics that you want to see me talk about and break down, go ahead and throw them in the chat now. Or better yet, go over to the Finance Rebel group and put them in a group. Somebody start a chat or a dialogue over there and put that in there as well. But I appreciate you all. Again, I'm Kamari Ellis. Do me a favor, share this out with someone. Alnisha, thanks for joining. Alnisha, I think this is your first time joining. We got to get you in here more. We like to have a good time. But again, appreciate you all. We'll be back Saturday. Everybody have a great day. We'll see you this Saturday, and we'll also see you next Wednesday as well. And in the meantime, go listen to the podcast, y'all. Go listen to the podcast. Leave the podcast a rating and a review and a comment. Again, all you got to do to find a podcast is look it up in your Apple Store or Stitcher or Spotify or Google Podcasts. I'm all over the place. All you got to do is Google it. You can Google the Finance Rebel Show and it'll pop right up and you can listen to it. All right. So you can take me on the go with y'all when y'all are working out, driving to work, back to work, from a meeting, or going to work out. All right, y'all. So everybody have a great day. I'll see you soon. Bye-bye.